Rupesh Parikh of Oppenheimer. He has an outperform on Costco and Ulta. Also with us, Simeon Siegel of BMO Capital. He has a neutral on Gap and Ulta. It's great to have both of you here. Rupesh, to you first. I mean, how would you sum up the state of the retail trade given what we got this week? Because at times it was confusing.
Yeah, no, it definitely was a very confusing trade. You know, I'd say overall, consumer spending out there is still strong. I think you're seeing shifts out there in terms of where consumers are spending. So we saw a very strong spending on beauty yesterday from Ulta and e.l.f. Beauty earlier in the week. So I think, spending is overall fine, but clearly the retailers are positioned to, whether it's beauty, the reopening trade, they're doing much better, while apparel companies are, on the other side of it.
Some apparel companies are doing quite well. It just literally comes down to what you got in the store, whether you have the right fashion trends or the right things that people want. And Simeon, that you don't have too much of your inventory, because we have seen a huge inventory build for some retailers, particularly in the teen space.
Yeah, so good to be here, Scott. So I think there's this interesting dynamic right now where people have this perception. No one's talking about recession today because the market's green, but like people have been talking about recession, inflation, everything is abysmal. But to Rupesh's point, people are spending. And so I think if we look at who missed, where the disappointing stocks were this cycle, it was not revenue misses. Revenue beats with margin misses took stocks down. TJX, one of the big winners of this earnings cycle, missed on revenues, protected margins. And it goes to your point, don't promote. What we learned in COVID was you could pull back, you could sell less, charge more, make more money, and enhance your brand after years of being forced to grow for growth's sake. I think the question now is who takes that lesson forward.
I want to find out why you guys disagree on Ulta the way you do, because it's certainly one of the stocks that we've highlighted today. Rupesh, your rating on it is outperform, and Simeon, you have a neutral on it. Rupesh, why do you like it so much?
Yeah, so for us, as we look at, as we came into this year, we viewed Ulta as a reopening play, and beauty has been challenged over the past couple of years. It started rebounding in 2021. Ulta is a big player in makeup, and our view was that makeup would undergo more of a renaissance this year. And if you go into Ulta stores, they've added a number of brands. So Fenty Beauty's now in stores. In other categories, well, Olaplex, Drunk Elephant. So between all the strength in their store within these different categories and the reopening trade, we thought you'd see more of a booming beauty backdrop. And you look at Ulta today, they put up an 18% comp on top of a strong performance last year. So I think, all the momentum continues both at Ulta and within the beauty category. So, this has been a top pick for us, and we still see double-digit upside from here, even after the double-digit move the past few days.
So, Simeon, what's the issue then?
I like this. I didn't know that I was going to get baited into a bull bear here. I thought I was talking about retail. So listen, Ulta's
you don't know me well enough.
This is ours. Normally Sarah and I are talking some other style here. Now this is fun. Like here now. Next time I know. So no, but listen, I think that Ulta's a great company. I think at the end of the day, we're talking about stocks. And Ulta's putting up this great performance. Ulta has this reopening trade. How long the reopening trade lasts, I think, will be interesting. But at the end of the day, we just watched an entire retail re-rating happen. Ulta didn't re-rate. Right? All things considered, it's still a very nice multiple. So I think they're doing a very nice job, top and bottom line. I think they have a great category. And listen, we'll see what happens if people pull back discretionary. Ulta, all things considered, did well in the last recession. But at the end of the day, the stock is reflecting that.
I got you, Rupesh. I got one last one for you. Why the discrepancy between Tree and General when it comes to the dollar stores? General, you got outperformed. Tree, you have neutral. Why?
Yeah, so Dollar General is more of a longer-term call for us. They've been a consistent performer. Year in, year out, they've been able to grow double-digit earnings growth over the past several years. And we like the unit growth story here. We still see mid-single-digit unit growth going forward. Dollar Tree, had a really strong quarter yesterday. It's very much on our radar. It is more of a turnaround story, so we are more bullish on a Dollar Tree banner. At this point, Family Dollar is a turnaround part of that story. It has gone backwards, so we need to see their plans in terms of revitalizing that banner. And I think it's going to take some time. So for us, I think Dollar Tree should be on the radar of investors, but I think it's still a multi-quarter turnaround story. While DG is a safe, resilient play you want to own in both good and bad times. And if the consumer does get weaker later this year, we think Dollar General will see it trade down. And that's the type of environment that they'll outperform other retailers and other consumer staple stocks. So I think DG is still the one you want to own between the two.
All right, we'll make that the last word. The moral of this story, Simeon, you got to be ready to debate. That's what we do. We'll talk to you again soon. All right, we'll have you back, I'm sure, and we will reprise that. All right, it's good to see you guys.